Not all appraisals are created equal, especially when you're comparing FHA loans to conventional ones. The loan type you choose doesn't just impact your mortgage terms. It can also determine how strict your appraisal will be, and that can affect whether you're able to close on a home at all. Let's break down the key differences so you know what to expect. At its core, an appraisal is a professional estimate of a home's market value. Lenders use this to make sure that the home is worth what you're paying and what they're lending. But for FHA loans, the home must clear another hurdle. The appraiser is also checking the condition of the property to make sure it meets HUD's safety standards. An FHA appraisal includes two parts: a standard valuation of the property and a health and safety inspection. The home must meet HUD's minimal property standards, which include safe access to and from the property, functioning heating, electrical, and plumbing, no chipping or peeling of paint in homes built before 1978, and no exposed wiring or visible structural issues. The appraiser is required to report any issues that could make the home unsafe or unlivable. If a problem is flagged, it usually has to be fixed before the loan can close. And if the seller won't fix it, the deal is dead, unless you can use a rehab loan like a FHA 203K. Conventional appraisals are more focused on the numbers. The appraiser is mainly looking at the market value of the home, comparable recent sales in the area, and overall marketability of the property. As long as the home is structurally sound and livable, cosmetic issues like peeling paint or outdated fixtures usually don't matter. That can make it easier for conventional buyers to move forward without any delays. If you're using an FHA loan, you might run into some delays or even have to request repairs before you can close. Sellers sometimes prefer conventional buyers because the appraisal standards aren't as strict. But if the home is in good condition, an FHA loan can still be a great option, especially for first-time home buyers or those with limited down payment funds. And if the home doesn't meet FHA safety standards, you might not want to live in it anyway. Regardless of your loan type, if the appraisal comes in lower than your offer, you've got a few options. You can renegotiate with the seller, you can walk away from the deal, or you can cover the difference out of pocket. Keep in mind that with a conventional loan, you may still be obligated to buy the house if you've waived the appraisal contingency. FHA loans, though, come with an extra protection: the ability to walk away if the appraisal comes in low, even if an appraisal waiver has been signed. Sometimes sellers won't accept FHA offers because of this rule, but it's a substantial protection for the buyer if the seller does accept the offer. FHA appraisals come with more requirements, but they're designed to protect buyers from the purchasing homes that need major repairs. Conventional appraisals offer more flexibility, especially when it comes to property conditions, but they typically require stronger borrower qualifications. Understanding the differences up front can help you choose the right loan for your situation and avoid any appraisal surprises along the way. For more tips on navigating your mortgage and finding the right loan, visit mortgageresearch.com. If this video helped clarify things, hit that like button, subscribe, and turn on notifications so you never miss an update. And if you have questions about your own appraisal situation, drop them in the comments below. We're here to help. Thanks for watching, and best of luck on your home buying journey.